All right, welcome to this video. Welcome. Let's talk about this, okay? I'm going to say something and don't run away because you disagree. Hear me out, okay? One of the number one lies is you won't go broke taking profits, okay? Um, I kind of professionally disagree with this, okay? You read a book called Market Wizards, you look at different traders who legit come from Wall Street and legit do this for a living. They all say the same thing: learn to cut losses and learn to add to winners. Simple concept, okay? In my experience, not so simple to do, right? So what makes this hard? In my opinion, it's hard because it's against how we feel, right? I don't want to lose, so I secure profits early, right? Because I can say I got a winner, I got profits today, let's go, you know. And I start scaling out early because I'm like, dude, I'm gonna guarantee this move, right? I'm gonna guarantee that I'm gonna make this a W. All right, just something I deal with. That is me being very open and honest and just saying I deal with that emotion right there. That's what happens, right? So, what I want to talk about is taking profits too early. I feel will make you go broke. Okay, the times I've done that, I think there is a time for this. Okay, for one, all right. If you start seeing order flow that's coming against your actual trade plan and it's starting to look like it's going to get a reversal, yeah, okay, you could talk me into scaling out of a position. But when you're in a winner and it's moving in your direction and order flow is clearly bullish on your long trade, why why are you not adding to the trade? Okay, here's a good trade as an example. I took this trade today. I did not add to the trade. Okay, so just straight up, all right? This is a trade I took for real, but I did not add to it. And the reason why is I was trading a combined and I can only make so much in a combined. So though this was actually like a trade target up here, this is not where I took the trade. Okay, this is where I would have taken the trade if I was able to, okay, if I was able to make more money. If this had been my funded account, this is how I would have treated this trade. Okay, but I'm just being open and honest about it. All right, I was actually out. I think it was actually this candle right here. I was already out because I had hit my max profit allowed for the day for a combine. Okay, all right, I'm just being honest. Okay, so but this hit me today and I was just like, dude, like, one, I need to start doing this, and two, I want others to start doing this as well. So my challenge to you is, after we go through this video, I want you to go back and look at the trades you've actually taken, okay? And I want you to apply this math to see how it would have ended up for you, if you would have ended up plus or minus, okay? So here it is. We enter the trade, okay? I'm going to go through the scaling up, the pyramiding in. This is what I'm going to do, right? So I take 3 contracts here on the entry, okay? We create a fair value gap. Now this one's a little fast, but we did create a fair value gap. And we came down and we kind of enter that fair value gap, and then boom, we push off of it, right? So I'm starting to get thrust up. So I'm going to add another one because it's like, cool, it's going in my direction. Okay, we pump up, we create this fair value gap. We actually come back into this fair value gap. This one was just created right here, but this one was created. We came back down and we respected it. So as soon as we had respected it, add another one. So now I'm up 5. I'm on 5 contracts, micros. Okay, and since I added in, my original stop loss was down here. All right, original stop loss was a $595 risk. Okay. So I'm going to move that up. So I'm roughly risking about the same. It was about a $680 risk. Okay. So from there, I'm risking 680 to, as we get to the top, when I hit my 2.5 RR, okay, which I know it says 5.3. So if I pull this back down, my original trade plan was 2.5 R. Okay. That's to me, that's solid. Okay. That's solid. That's not trying to catch some huge swing that's ridiculous. That's a good R&R, right? So there you go. So it's going to move 2.5, but I'm going to move my stop since I'm risking more now. I'm going to bring my stop up so that way I'm risking less. So now I've added maybe an $85 risk on top of what I was originally going. I can do that, right? To me, that's not crazy. That's good, right? So I added here, and it starts pushing up, right? And when we get up here to the actual takeout, the take profit, it's $2,260. Okay. So I risked 680 bucks to make 2,260 roughly. These numbers are rough. Okay. But think about that. That covers 3 losses right there. One trade. All right. Now, another thing we could do is just take it, right? Originally, the 3 contracts will hold to the top. Well, if I had done that, it would have been 1,360. But be honest, how many people actually hold their trade to the top to their target without taking profits? All right, let me know, like for real. Like this is stuff that I'm just being real about. It depends on the trade. I'm not very good at adding trades. I've done it and I've seen this work, and I think I'm really just going to start forcing my own hand and making myself do this. Because the more I go back and look at my own trades and I look at the math, I'm like, why am I not adding to winners and learning to cut, the losses? Okay. So here we go. So if I just held, it would have been 1360. If I were to scale up, we're talking 2260. Now, here's what most people do. Okay. And I talk to myself sometimes, and I've learned to journal this when I do this, so I stop myself from doing it. Okay, but I still do it sometimes. I still fight this. Scaling out. Okay, taking profit early. This is what a lot of us do. Okay, so I enter, it pumps. I might even decide to take one right here. Instead of adding a contract, now I'm selling one, right? Now I'm taking profit. Moves up. We went above this high. Dude, I better take profit, man. I better take profit. Take one. Okay, and then it starts to move up, and then I hit the top. So if I had scaled out, it would have been a $789 gain. So, okay, let's do the math. I risked $595 to make $789. I'm covering one loss with a tiny bit of buffer. That's to me, that's not sustainable long term. Okay. All right. There's gonna be times where my hit rate is low. All right. So people always ask, what is your win rate? And I'm like, well, it kind of depends. Like, am I feeling good? Am I firing on all cylinders? Do I not have a bunch of stress going on in my life? Am I clear headed? If all that's together, I can usually swing in the 75 to 85 range, right? 75 to 85% win rate. That's, dude, if I could do that all the time, like, anyway, I don't. Okay. A lot of times it drops to 75, 65. Okay. And a lot of people are like, oh, well, over time. I mean, over time. So over time would be, probably like 70, 75, right in the middle. Okay. But it does depend, because there are times that I can keep myself on my A game and I'm swinging in the 75 to 85%. All right. And then there's the times that I swing 75 to 65. Now, the deal is, when I start dropping below 50%, I kind of like, time to have a meeting with myself. Am I truly sticking to my strategy? And my strategy just so happens to be this month batting a little under 50%. If that's the case, I know the wins are coming. Okay? Here's the deal. If that's not the case, then I need to have a different conversation with myself, okay? And say, you, sir, need to start following your trade plan and getting back to the basics, okay? Maybe I'm starting to revenge trade a little bit, because I mean, if I take like 3 revenge trades a week, and I'm bored and I want to trade loss as well, that adds up really fast. And if I can identify that I'm doing that, then I can pull back and be like, okay, look, I need to be between, 65 and 85%, because that's where I'm comfortable making, money. Being consistently profitable is me closing 65 to 85%. Okay. 85 being on the high end, 85 being the market just loves me that month, and I'm actually, right on point and I'm doing well. All right. So that's my challenge. My challenge is for you to go back on your last, I don't know, 10, 20 trades. If you want to do 100 trades, go ahead. If you're not journaling your trades and you can't go back, then the challenge is different. Start journaling. That's my challenge. If you do journal, I want you to go back and apply this math. and do this, just holding, scaling out, and then scaling up and pyramiding in, and see which one really like which one's really going to be profitable, because you are risking a little bit more. I risked an extra $85. Okay, and I moved my stop up, so maybe I lose 2 trades because I get wicked out and then it continues. Okay, and if I had just held, I would have won that trade. Okay, makes sense. When you move your stop loss up, you are increasing your chances of getting stopped out. But scaling up, covering 3 losses in 1 trade. Okay, like I think this is really worth doing it. Okay, so I'm not picking on those who say you won't go broke taking profits, because, you know, if I were to take this same trade and it came all the way up here and I was like, yeah, I'm in and then it just turned on me and it came all the way down, I lost the trade. Okay, obviously that's a big problem. Okay, when I get to my 2 to 1 is where I will start to shave. Okay, 2 to 1, 2 to 2.5. Definitely 3. When I get 3 to 1, I'm starting to scale out. All right. So I'm not saying just sit here and add and add and add and then just hold forever. Okay. Have a plan. All right. My plan is, 2R, 1 to 2R, and then 2.5, and then 3. I'm starting to scale out really heavy. Okay. So that's why I did the 2.5, because sometimes I push for 1 to 3. Depends on the trade, depends on the liquidity that I'm shooting for. All this stuff, like if you don't understand this kind of stuff, we'd be glad to help you. Just reach out, and we can help you with this kind of stuff with your trade plans and things like that. That's what I do. I love helping people. So anyway, yeah, you won't go broke taking profits. Okay. Well, if I do this, it's killing me. Okay. I pretty much have to have like a constant, 70% win rate to be profitable, because I'm barely, making it. And those months and weeks that I have a, 33% win rate, let's not pretend it doesn't happen. Okay. Then I'm just going to get obliterated. I'm going to get crushed. Okay. Most of the time, like I said, as soon as I hit the 40% close rate, I start, or anything below 50, I start to have that one-on-one meeting with myself to figure out what's going on. All right. I think this one, and it's hard. I'm not telling you to do something that's easy, but it's just so hard because we don't want to lose. All right. And it's hard because it goes against how we feel, right? If you don't want to lose, secure profits, take your TP early. You hit those W's and they feel good. You get dopamine off of W's. But this is not a dopamine game. This is not a feel-good game. This is a make a plan and stick to it game. For real. This is a mathematical game. You talk to these geniuses, and I've had a chance to talk to a few. Some want to be unnamed, okay? Others you would know if I mentioned their names. And this is what they tell you. Cut your losses, add to your winners. Okay, there's got to be something to this. Anyway, I really hope this video was just, something to just open your eyes up to this. I don't say just go trade it. I say go back, look at your journal, do the math, run the math, come up with a plan, be smart about it. But I hope this is helpful to you. It's been helpful to me the times that I've been able to implement it. So, all right, we'll see you next video.